Hello, Warriors. Everyone doing okay? Let's have a great week. Hugo, Brock, Kevin, Alexander, how are you guys? Everyone ready to rock? Hi, Hugo. NG, how are you? Hi, Ren. Okay, so, we had a pretty negative week in crude last week. Seth, how are you? Welcome back. Looking forward to talking to you at the bottom of the hour. Be nice to catch up with you. Hello, Marco. Paul, how are you? So, we had a pretty negative week in crude last week. Finished mid-range, and I'm thinking there's potential for, more of a correction, maybe back towards this level, I think eventually. So, trying to sell a retrace in crude right here. And there's your 2 hour. I'm not exactly sure what the fib is. Here's your 4 hour. So, very possible that crude peaked last week. And I know that we're not at new highs in S&Ps. It looks like if we could clear that 41.85 level, just arithmetically, you're talking about from 40, 30, 150 handles here. So if you tack on 150 handles from this horizontal resistance right here, you have 43.30, which is in the range of some objectives and upside targets for the S&Ps to complete. So this is an important week for the market. For those of you that follow astronomical things, for potential turning points, we do have a lunar eclipse on Wednesday, and then most likely a big reversal on Thursday for my birthday. So, two major market events. Full moon, and with the full moon, total total lunar eclipse. Looking at the dollar, and this is really the key for everything, right? So, we haven't made new lows for the move in the dollar. That comes in here at 89.20. I'd like to see him just take care of business right here and get it over with. You're even seeing on CNBC people like Carter Worth saying we have a major breakdown happening in the dollar, and DSI was, I don't know, 13 on the dollar. So the way I see it is it's pretty hard to jump on the bearish bandwagon here. Yeah. So we'll see. Maybe this is the week we finally clear out that low. As you can see on the weekly, it won't confirm. On the daily, it may. So, it feels like it's too late for me to be pressing this to the downside. Probably isn't, but it's not my style, and too early to bottom pick it, especially when euro is outperforming cable, right? So, if you look at euro right here, we had this kind of little double top. I think there's a bunch of buy stops here and here. So if we do get a dollar pullback in euro, the fact that EG is having such a good day, looks like it's, back on its, turned. So it looks like it's turning, maybe a short up here. In fact, this weekend when I went up and down all of these different instruments, most of the answers I came up with was, I don't know. The only thing that kind of made sense to me coming in this week was, to try and sell a rally in crude. And we'll see what happens here with euro. It may come off, but it's not the kind of day I fade euro strength. The pound, as I was talking last week, you had a nice little 3 drive here. So your preferred short right now is cable if you want to play the upside the dollar here. Josh, I was talking about that too, and I really thought back here we'd make new highs in the 10-year yield, right? But to me now, it's looking like the potential for a failing rally. I don't know what's going to be behind it. Weaker economic data, maybe it's smelling risk off coming, but this looks like a failing rally to me. If we take out 150, you're talking about maybe 125 on the yields. So I know that would not be that constructive for the yen. I'm not saying that the yen is a short, but that bothers me for wanting to be long the yen. It does look like maybe we'll have 1, 2, 3, one more push up. It looks like a flag, big flag. Okay. Yeah. So, I mean, to me, another I don't know. You could also visualize that it could be peaking up here and we get something like this from here. But, if you use a correlation of rates, that doesn't look supportive for the yen right now. So that's what I mean. I'm getting so many conflicting things. This is one of the first Saturdays when I was going over my work that I didn't have a conviction. And it makes me feel uncomfortable that, I don't know what to do. But I've learned over time that that's okay because things will clear up if I'm patient and I'll be able to see some things. I think that we could, once stocks start really unraveling, I think you could have some pressure in the end. And I also think that you could see maybe that's why rates will come down. We could get some flight to quality. Here's your 20-year, the TLT. And it certainly looks like we're putting in a higher low here in TLT, and we could get a pretty good rally first up here, then maybe a failure. So, I'd rather bore you than mislead you, and hope you could handle the boredom with me. But that's a great part of being part of a team and being with Forex Analytics because, if I don't have ideas, the team certainly does. Okay. So that, they do. They have active patterns in play. I don't know if they did anything new recently. Here's some nice trades that they have going on. Blake's been short silver, Euro Aussie. So that's a great part of being in a community too. So, if I'm on my own and I'm in a period where I'm not getting a lot of ideas based upon the methods that I use, being part of a community in the chat room here with the team and a lot of great traders that this is not a hobby for is going to be great on a day where they may see something to point your eye towards it and then you see it. So it's collaboration, intelligence gathering. Interesting. Lone wolf trading never prevails. Teams, resources, like it, Seth. Okay, so we'll see what develops this week. And right now, I'm sure Blake has more to say than I do today. In fact, I think that you guys already have had more to say than I see right now.
Yeah, I was going to let you just go and go and go. Actually, Dale,
Why?
I was hoping you would just continue because I don't have a whole lot to say.
So it's not, it's not that my vision is foggy. It's like everything looks like to me like it could go either way.
That's how I felt last week, and I said that in the week ahead video. I said, I'm going to let the market do the talking this week, and I'm usually I have opinions, and the one thing that I did I do have an opinion about is that is Bitcoin is in breakdown territory, and that's to me that's clear. We had a little bit of a sell off down to like 32,000. Or so, or is it 33,000? I'm not
hard to keep up.
What's that?
Yeah, what it depends if you're talking a minute ago or 10 seconds ago.
Yeah. I'm trying not to. I'm not trying to focus on it too clearly, but other than, hey, as long as we stay below 42,000, 43,000, it's bearish. But other than that, the rest of the market's actually consolidated. And I'll show you some of the consolidations that we're seeing. But I'm going to give you an example, since you guys were just talking, or you were just talking about the community and
Yeah.
and this is our Forex Analytics chat room. And I'm going to tell you, it's been pretty quiet since I've been here. But this is just, from this morning and stuff. So here's a this is a comment from Steph. She wrote in, where did she write in? No, that wasn't it. Oh, Chi wrote in, he goes, also watching
Crude?
Canadian yen, hourly triangle. Nidis showed if it breaks the upside, I think 91.50 equal distance of triangle, blah, 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 blah. And I said, oh, this is the chart. And then Steph wrote in a question for Niddish, because I like it looks like Blaker and Amanda both see short Canadian yen in their charts. Did I see your long? What was the time frame of your chart? And I answered, it's below the channel, which was bearish last week, but the lack of breakdown in the triangle consolidation is building a bullish breakout now. So, and then here's Niddish response. Yeah, we're above a multi-year trend line in the Canadian yen week. And so this is an example of just this morning, when nothing's going on. I just wanted to highlight the fact that it's been really quiet in our community, but you can see what we're talking about in chat. It's not, we're talking about ideas and what we've seen. And look, our ideas will shift. I mean, I could be, completely bullish one day on the euro, and the next day say, you know what, things kind of turning a little south here, and we're starting to see some bearishness develop, blah 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 blah, and our views are going to change. So if you're actually just watching like the face webinar, and you're watching the week ahead videos, you might not catch like everything that we're discussing, obviously, and our views do change quite frequently, because look, we're traders, and that's the great thing about being a trader, is when you trade the markets, a lot of times you trade both sides of the market, and your opinion is going to shift rather quickly based on the information that you have in front of you, or maybe some correlation that starts breaking down in one direction or the other. So that's, just give you guys a view of what happens inside of our chat rooms throughout the course of the day. Now, I don't have a lot of opinions about right now. As you can see, like the euro dollar is still above that 121 and a quarter and 125 or 122.50, excuse me, resistance. I still think that this is setting up quite nicely for a breakout, one direction or the other. May not happen today. I mean, you look at equities, S&P's back towards 41.75, and I think we're consolidating here as well. I had drawn this out last week. I said, and if you guys recall, I had that drawn originally.
Yeah.
And I said, to be more symmetrical, it might end up being like this. And frankly, if you look at the Canadian yen, I mean, it actually looks very similar to this S&P chart, believe it or not. I don't rule out. I mean, this is the S&P, and this is one other thing that we talked about late last week. This could be like a Gartley, right?
Yeah.
It could be a butterfly, right? So, I don't
Where's
think
that come in up there at 1.618? 43.70.
43.75 ish.
Okay. Yeah.
43.80, somewhere up here. I don't rule that out at all. I mean,
especially if the dollar breaks and euro keeps going up. Yeah, right.
Nothing's set in stone right now, and let's face the fact that stocks are near their all-time highs and they're not pulling back. I was like, yeah, we get below 4,000 and I'm going to change my tune here in the markets. We start getting below 4,000. I'm going to be like, okay, well, maybe it's time for a little bit of a pullback, but you guys know that, my base case in the equity markets have been, more of a grind higher, to a new high and, hopefully a blow off top type of thing. It's just right now, we're holding up and you can't disregard the fact that we're holding up and onto these gains. I'll say once again, the crypto market does have my attention. I do think that the Bitcoin market below this 43,000 is a bearish event. I actually think that Bitcoin is just building. I think Bitcoin's building to break down, somewhere around here. Whether it's this is it here, or bounces a little higher. I think we're actually breaking down, and the question that I have is, how will the markets respond to a sell-off in a continued sell-off in cryptocurrency? And I still think that there is a risk that we see like a spillover effect in these from cryptocurrencies to other currencies. And let's not ignore this. Probably, well, if you guys are using Forex analytics, I'm long Euro Aussies. This is a breakout, and this typically will signal a reversal in risk. You're getting a bullish reversal in the Euro Aussie, and we start breaking back above this 200-day moving average around 159.50, and especially this previous support, which should act as current resistance. We start getting above these levels, and then you're talking about a bullish breakout. That, more times than not, I would say 80% of the time, that's going to go hand in hand with a sell-off in risk. So, you see things like this happen, and you start to see the Aussie dollar breaking down, especially against the euro, which is a funding currency for carry trades in the currency market. You see the euro Aussie start to rally. That might be signaling to us that there is, some risk off activity happening. Another, these are just things that I'm obviously keeping an eye on. Euro Aussie, I'm long, but I'm watching for a much longer term development. I have, by the way, since I'm very well positioned in the Euro Aussie, buying it down here at 156. We start getting up towards 159. I'm literally going to take off like a third of my position, and I'm going to let the rest of the 2/3 run, because if it really starts to squeeze, this is if you guys don't trade the euro crosses and the pound Aussie cross, the pound crosses, these pairs can yield like 1,000 pip move real quick, like really fast. Okay. For those of you that don't trade them, these are some of my favorite currency pairs to trade.
Big beta.
What's that?
Big beta.
They are. I've been trading them for years. Like back when no one traded them, 12, 15 years ago, we would be on the Morning Edge webinar, and I would ride these like a wild bucking horse. But these are if they take off, you can really get some very big moves out of these, especially just a little shiver of risk off. You'll see this thing spike up 400 or 500 pips real quick. So anyway, I wanted to bring that to your attention. Also, one of the other currency pairs that you should be watching really closely here is this one. the dollar South African rand, you'll notice, guys, we're holding, and this was my chart of the day, like at some point last week. I want to say it was Wednesday or Thursday. I can't remember. Anyway, you'll notice we're holding 2019 lows. You'll notice also we have a descending wedge. You'll also notice that relative strength is divergent.
Nice formation.
And man, if we get a move above this this descending trend line,
that's
around
move.
the 1410, 1420 level, this thing, I mean, I want you guys just to calculate here. Let's do it. So let's say your entry is around 1420. I'll give you the benefit of the doubt of you're going to be late to the party, right? You're not. You're going to wait till it actually breaks through here, right? Okay. Now let's do a little bit of work. Let's take a fib retracement just from the 2021. Well, we'll go all the way to the 2021 highs, which I think we can measure from the other direction. But let's give it a 618 retracement. So 1497 limit. Okay. And what we're going to go with, if it breaks through 1420, we'll put our stop back below 14, let's say, somewhere around here. We'll just go, okay, well, if it gets back below 14, I don't want to be long. So here's your limit. This is your entry. Okay. So let's go stop loss 13.99. Okay. That is a 3.6 risk reward ratio. Let's say you take a position of, I don't know, 50,000 in currency, which is a half of a lot, right?
Yeah.
So you're risking $750 to make close to $3,000. I'll take that risk reward any day of the week. And we're talking, if your target is here, how about if things get a little out of control and we see a little bit of risk off and we start moving towards that 127% extension, which is, what was that? 1613. So basically you risk $750 to make over 6,500. And now you're looking at this chart and going, this is 2021 here. Would it be crazy if we hit new 2021 highs in a risk off scenario? No, it's not.
How about Euromex? You said that's like the supercharged risk off currency.
Where did my Euromex go? Oh, there it is. I don't know what it's doing down there. Yeah, I mean, here's the Euromex, which, by the way, has been holding up its breakout point. I mean, this is one of the,
that looks even better.
This is one of those other ones. Yeah, it's holding up really well. I mean, we could trade back up towards channel resistance. I mean, your risk is below that 618 right there. We get above 2450, and then we're going to scream higher. You know what I mean?
Yeah.
There's a lot of stuff setting up, guys, and so I don't want you to be discouraged that the market's just kind of floundering around. Hey, by the way, I just realized I just talked a whole lot, and I have my colleagues Steve and Stelios are here, so I want to bring them in. And Stelios is back from his trip around the world, or the Greek cyclotic.
Boy, the color of that water is unbelievable.
It was just away for 2 days.
Stelios, tell us a little bit about your experiences, because we're all jealous.
No, I was just away for just over 2 days near Athens, in a couple of islands nearby on a sailboat. So not too bad.
My goodness.
Not too bad for a nearly 50-year-old man.
Stelios just sent us this picture.
Look at the color of that water.
Yeah, that was really nice.
What was the
That's
water
amazing.
temperature?
I don't know,
The-
but it was not too cold. So I
Wait,
even
what?
I even
You
went
don't
water.
know? You didn't get in?
I got in, but I don't know the temperature. I mean, I don't know. I can't tell you
God.
exactly degrees. I water skied. I did everything. So don't worry. We had a good time.
Wow. That's
Yes.
amazing. So so you had a really nice trip.
It was good. It was great.
That's good. So
You did everything.
I'm
That's what
since
all
you
I
haven't
heard.
been around in front of you haven't been around in front of the computer all that much the last couple of days. Steve has. So Steve, good morning. Are you here?
Yeah.
I think I am.
Oh,
You didn't
hey,
do
Steve.
everything this weekend, did you, Steve?
Nope. Left some for sailors to do.
So Steve, who like me, we've been a slave to the computer probably the last few days. Steve, what are you looking at today? What do you see that's perking your interest?
What I see that is perking my interest. I see that equities are at a decision inflection point. If we're going to get another leg lower or we're going to continue higher. So that's what I'm focused on. That's, of course, is going to also dictate what happens with the dollar. Now, having to do with cryptocurrencies, as I said early last week, I was very doubtful that the sell-off was over. And so far, it's proving that that was the case. Now, I'm not sure if it's over now. I have some targets I had that were hitting Ethereum mostly. So I want to see what's going to happen tomorrow and today, of course, as well, today and tomorrow, to see if we're going to get some kind of a short-term bottom in these markets. I think there is a lot more, a big part of the crowd that has yet to capitulate. So that makes me still doubtful.
You got a 2 dry formation on the last chart that you showed. Yeah, maybe you got one more down there.
Yeah.
Oh, Ethereum, like the 4 hour here. There we go.
That's pretty classic looking.
True.
Yeah.
Remember, guys, a huge level in Bitcoin is 25K, which is where MicroStrategy are on average long, and they are a pretty big whale. So.
Oh, that's good to know. You know, we're trading well below the 200-day moving average.
Something tells me that guy is sweating bullets.
Yep.
You know, as I had, I don't know if you guys watched the week ahead video, but if you see the similarities between the 2018 peak and the peak that we have right now, it's very similar price action. And I'm personally, I'm just waiting for a $20,000, $15,000 move to be on the long side. But I don't know if we're going to get all the way down there. But that's patiently what I'm trying to wait for before I start establishing any longer term positions. But man, it still is trading heavy, right?
Yep, absolutely. Yep.
So, all right. So you mentioned Ethereum, you mentioned Bitcoin, and you mentioned equities. Look like we're consolidating here. Anything in the fiat world that has your attention?
Till proven otherwise, dollar is a sell, and everything else, almost everything else, is a buy against the dollar. So, my thesis hasn't changed there, and so far I don't have the technical reason to change that thesis. I need a lot more evidence to even consider the possibility of a reversal.
Does it make you nervous at all, Steve, that sentiment is where it is on the dollar?
No.
Okay.
I think sentiment is extremely bullish, the dollar.
Oh, no. The DSI is like 13.
No, you don't get what I mean. I mean that the fair value for the dollar, in my opinion, is 40, and it's currently, where it is. So if you ask me, and if you ask the average person where the dollar should be, nobody's going to tell you 40. So if you're asking me, the sentiment is still extremely bullish, the dollar. I mean, yes,
so you
everybody
think long
thinks
term
that
40
in the
Dixie. 40 in the Dixie?
That's not going to be easy because a lot of geopolitical factors will need to weigh in. And as long as the dollar is the world reserve currency, that can't really come into play for other factors. But I mean, the US is really pushing its luck as much as it can. And, one thing I've learned from history is that either the longer you push your luck, at some point luck finds you. You know what I mean?
Yeah. Well,
All
I mean,
right,
it's
well,
not, yeah, there are some people talking in the 50s range for the Dixie long term for the next couple years. So it's
Oh,
not that outrageous.
it can happen. Yeah.
Yeah.
well,
Okay.
well, Steve, thanks for your thoughts. Dale, I know you have your interview right now, and I
Yeah.
want to say thank you everybody for listening in today. Remember, visit our webinar sponsor, Pepperstone Securities and Forest Park FX. You can learn how to get Forex analytics for free for a few months and jump in the chat rooms with us. You have to open your account through here if you're outside the US or Canada. And if you're in the US or Canada, make sure you visit Forest Park FX. If you want to talk to them, there's some links to talk to them down below. They're like the concierge of the FX world. So I'm going to let you take over, Dale. And
Hey,
thanks
buddy.
everybody for tuning in.
Good hunting, Blake. See you later.
Thanks. Yep. See you later. Thanks, guys.
Seth Golden, it's been too long. Welcome back to Face. How are you?
Yeah. Good morning. Thank
Hey,
you.
buddy. Good to have you back. You know, every once in a while, I just start scheduling people, and I forget to get the good people back in the rotation. I'm so glad that you're open to coming back. It's been a while since we talked. You've used Zoom before, right, Seth?
Yes, I have. Yes.
All right, so you could share
Yeah.
your screen now. I don't think we have to go back through your history and how you got involved in the business. Getting some nice Twitter action from some of your fans, from talking about your company. And I'm curious what's on your radar. Right coming into this week, the end of the month. I don't have a lot of ideas, at least right now. I'm wondering, and it sounded like most of the team kind of felt that way too. What's on your radar going into
I
month
think
end?
the list of what's not on my radar is a lot smaller. So that's probably,
Okay.
There's nothing that's not on my radar. You guys were chatting up earlier about having resources and having a team. And that's something that I've fostered throughout my career. I've just always felt like the more information that you have at your fingertips, and the more feedback systems, the better off you're going to be long-term as an investor or a trader. And that's something that we promote at Phenom Group with our members. And every week, what you're looking at here on my screen is something that we send out freely to the public and our free members at Phenom Group. And it's basically what we call our weekly Nifty 9.
Okay.
It's an extrapolation from our Sunday research report. We issue a full-scale research report every Sunday that entails everything. That's why, when you ask the question, what's on my radar, my members are probably saying, man, that's just the wrong question. The guy, he's got everything on his radar, which is
What's
why.
the 9 stand for, Seth, in the Nifty? I know it's kind of a take off on the Nifty 50, but
right.
What's the 9? Is it 9 mean 9 key markets or stocks?
It's nine key charts, 9 key extrapolations from our weekly research report.
Okay.
Just some easy to decipher, some analytics, if you will. The first one that you're looking at here, again, research report excerpt number 1. We've been monitoring this analog since the bottom of 2020. This is the S&P 500 going back to the green line is 2009 to 2010. And the orange line is 2020 to 2021. And so you can see how we've tracked the 2009 into 2010. This is the crossover into 2010. You can see how we've tracked the bottom of the 2009 market very, very closely. Until most recently, this is the widest divergence that we've had. And this box indicates that divergence here now is about 27%. So we're still traveling along the same path, but from time to time, we're essentially on a different time plane when it comes to the analog. So we've
Okay.
kept this in focus since about April 2020, and it's been a very, very useful tool in terms of just looking at the market from a quantitative perspective and kind of drowning out the noise of the financial media.
Yeah, interesting analog and really closely. So, that's kind of saying when you have to be prepared for some risk off if that analog continues to work, right?
Yeah, this drop here, this initial drop in May coincided with, and I'm sure you and your members and everybody that's tuning in recall, that was the start of the May flash crash, which ultimately resulted in about a 16% correction in May through June, early July of 2010. So if there's going to be a deviation, we would say initially it would stem from, some of the new implementations that would offset the probabilities of a flash crash this go around. So the market would demand some kind of catalyst outside of a flash crash to bring this dip about.
Okay. All right. Yeah, that's interesting. So yeah, I'm trying to remember that flash crash that many years ago. I have Alzheimer's disease. So anyway, so you have to keep an eye on that. And you're saying the difference between 2010 and now, maybe it's the Fed.
There's definitely, 2020's monetary impulse is some 3 times greater than 2008, 2009. So there's definitely, you have to factor those in when you look at an analog like this and you see the consistency between the past and today. You recognize human behavior, is pretty consistent, even though the variables in the market or in the macro are always unique. They're always different. What causes this, that, and the other is always different, but the market is basically your extension of human behavior. So when people, look at an analog and they say, yeah, but, the Fed this, or the federal government's fiscal policies that, I say, that's all well and good. But the market is an extrapolation of human behavior, and human behavior, as shown in the analog, tends to be very, very consistent. Therefore, even though the variables may change and the magnitude of the variables will differ, it doesn't exonerate the possibilities.
Okay. Nice look. Appreciate that. So what's number 2? What are you looking at here?
Yeah, so number 2 we have here something that we looked at back when this signal fired. It's the percentage of stocks trading above their 50-day moving average. And this chart this table comes to us from LPL Research. And when we get 90 or greater than 90% of S&P 500 index components, the stocks themselves trading above their 50-day moving average, the forward-looking returns are rather strong. 1 month out, 3 months out, 6 months out, 12 months out. The last time this fired was in May of last year. So here we are a year later. Did we do 15.9% since May 26th here signaled at the bottom? And of course we have. We've done a lot more than that actually. Right. But what struck us is that what you don't see on the table here is what we discovered in our research over the weekend, which was on April 14th. Yeah, here's the date in this chart if I can align. April 14th, this signal fired again. Now, if you look for this in social media or wherever, you're not going to find it. So it was widely overlooked, because it was just one day that this got back above 90%. So essentially, we have another breath thrust that fired, and we have to add this to the table and quantify forward. Because again, these quantitative studies help to alleviate a lot of the noise that's out there in the financial media, which, kind of creates this vacuum for investors to fall prey to when it comes to all the negative commentary and potential pitfalls for investors in the market. So this signal, again, just fired in April. So what we would do is add it here and look to, the 1 month, 3 month, 6 month, and 12 month. More importantly, it's not the actual average returns, but the percent positive rate. 1 month later, the market is higher 72% of the time. 3 months later, 90%, so on and so forth. And this is a way of, we look at you have fundamentals, you have your technicals, and you have your quantitative data. I've always believed in having multiple disciplines. And this is a way of achieving those multiple disciplines, having, these various studies and quantitative data points. And this one, allows the investor, the average investor, or retail trader, if you will, to basically align their portfolio, align their sentiment with the probabilities going forward. Instead of, well, this person on CNBC says this, and this person on Bloomberg says that. This drowns out the noise because it's quantitative, it's black and white. You can't argue with it. It doesn't speak to sentiment. It speaks to, market history.
Okay. Interesting.
Number 3, and we've the NASDAQ, right? Tech and the NASDAQ, growth stocks, they've been underperforming for many months now, if not a couple quarters. We've seen value, we've seen cyclicals, all of that aspect of the reopening trade and the reflation trade outperforming what investors had gotten used to over the last decade, maybe 11 years, which is tech and growth outperformance. So one of the charts that's been on our radar lately is the NAMO, which is the acronym or ticker for the NASDAQ McClellan Oscillator. And the reason this has been on my radar, along with other NASDAQ, various breadth indicators, is because I'm not of the opinion that we're going to enter this new paradigm of value outperformance, maybe for the next decade, or financials outperforming for the next decade. So I keep a watchful look. Mm-hmm.
Why not?
Money in the market follows earnings. It follows safe earnings, if you will. And eventually, tech is still going to deliver that. What we found over the last 2 quarters is the realization of yield. Where can investors find the greatest yield? And I think what gets lost in this whole equation of value versus growth and where can investors find the greatest yield is leadership and the concept of identifying leadership. It's all about your starting point. So if we take our starting point and we acknowledge that the new cyclical bull market started in April of last year, well, what led us out was technology, was growth. And why? They have the most clear or visible forward-looking earnings. They have the greatest free cash flow, and they led the market out of the bear market territory. What happens next? Well, once you realize the forward-looking yield, investors basically gobbled up those forward-looking yields in tech, in growth. Well, what was left was high valuations for growth. So now the rotation begins. Where's the next leg? Well, it's the economic recovery. And so now the greatest yield as of maybe September, November of last year came from the reflation trade. It came from cyclicals. All the yield had already been absorbed in tech and growth. So now they start consolidating. Tech led us out of the bear market. Tech led the consolidation phase. Tech, in my opinion, tech and growth will eventually lead post the consolidation phase into the mid-cycle portion of the new bull market.
How about that tech led the recovery and tech could lead a bear market?
It certainly
the
can.
correction.
Yes, absolutely.
So, I mean, isn't that a possibility? And when you think about it, it really was the catalyst for the huge recovery after the COVID crash and its underperformance, maybe as a market message or market tell that when leadership becomes the laggards, that there's a possibility that it could lead a decline in the market.
There is that possibility, which is why I would lean on the fundamental side of the equation that says this is normal and to be expected. Technical tech / growth consolidation, because the earnings are not showing any divergence. They're not showing the propensity going forward for deteriorating earnings growth, but rather accelerating earnings growth. And the composition of tech is also showing that same thing. There's no true divergence there. There's just normal and to be expected, if not garden variety, consolidation taking place here.
Okay.
So that's just my opinion, of course.
Okay.
An exogenous event is beyond my scope of analysis. That's why it's black swans and things of that sort. You can't really forecast if it falls into but it falls into the realm of possibility. So always keeping an open mind and flexible approach. To my analysis,
it is the longest bull market.
Proved prudent, if you will.
Yeah.
So going back to
this
this NAMO indicator, what we've seen recently is that it hasn't made a lower low since the March 12% correction in the NASDAQ. It hasn't made a lower low. And right now it's putting in somewhat of an inverse head and shoulders pattern and trying to get back to these better levels that it's been in the past. In my opinion, this is starting to show signs of tech outperforming once again and maybe taking back the leadership role. One of the things that I always lean on when it comes to any forms of technical analysis is, technicals tell you what happened in the past and what is developing. They don't, they're not forecasters. You're just using past and developing situation to draw some level of conclusions and expectations going forward. So this is a chart that's definitely on my radar. And as of this morning, futures look, like they are pointing higher. For those that are not familiar with the McClellan oscillator, it's a form of the advanced decline lines, 19-day exponential moving average and the 39-day exponential moving average there. Advanced decline line for short, if you will.
Okay.
And another reason why I think technology is going to start recapturing that leadership is something that we saw last week in the market on Wednesday with the semiconductors having that intraday reversal. As we all might recall from last Wednesday, we started down in negative territory, gapped down pretty sharply on all the major averages,
right.
NASDAQ especially. But all of a sudden,
NASDAQ came back the best. Yeah.
Yes, semiconductors actually led the way in a big way. And there's various industries within the information technology sector. You've got your semiconductors being the largest. Then you've got cloud computing, you got software, and you've got cybersecurity. Well, if those areas of the technology sector are going to start to move higher, you're going to need your big boy, your SOX or your SMH.
Right.
Those are your sector ETFs, if you will. You're going to need them to show their strength. And that's exactly what happened. We had this outsized reversal candle intraday. We're down more than 2% to start the day and rallied to be green on the session. And so this was, on my radar. This is something that we introduced into our weekly research report because we want to know after this happens, how do semiconductors, fare? How do they perform going forward? And that's what this study tells us. On average, the SOX posted a net gain of 1.7% in the first 5 days after days like Wednesday, which is a little more than the 4 times the size of its average 5-day return of only 0.37%. So, by and large, this is basically saying that we may have hit, somewhat of a trough near term in the semiconductors, and they have been higher since.
Yeah, I think that was a key event last week.
Yes. Yeah, I
Don't
think
you?
so. Of course, anything can happen. A lot of variables to consider. But again, in terms of the quantitative data combined with some of the technical data, we are seeing the signs of capitulation maybe in technology or growth areas of the market where now it's possible you can make the rational argument now that the yield absorption has been had in industrials, materials, chemicals, value. And so the market is having this kind of tug of war with itself right now. We've already extrapolated the yield in technology and growth last year. Now in the first 5 months of the year, we've extrapolated all the yield in the reflation trade, the cyclical. So where does leadership come from now? And so we've had basically this 6-week consolidation in the S&P 500. We've hit new all-time highs, 42.38 in the S&P, but if you go all the way back to the beginning of April, we're right back to where we were. And
all right. Well, you know what I'm kind of getting from this, Seth, is almost everything that you've talked about besides the analog is very constructive. And the analog is saying that the market is ahead of itself and due for some type of decline. What do you put heavier weight on?
Earnings. I always go back to, I'm kind of a believer in the, Larry Kudlow's earnings are the mother's milk of markets.
Yeah. Okay.
And as earnings go, the market will follow, if not immediately, over time. And just thinking long term, something that I often talk about with our members at Phenom Group is act locally on price and in accordance with your game plan. Act locally on price, but think long term. So if you're taking action on any particular stock, ETF, on your watch list or as part of your game plan, make sure you give yourself, enough time in that trade and or investment in case we do see greater consolidation. But when it comes down to it, you can see that the earnings estimates have been woefully too low year to date. You can see from where we are right now, the consensus forecast for 2021 EPS is 188. Yeah. We started at 173 as we were starting the first week of earnings season with the financials. It's now at 188. This will finish with a 190 handle by next week. And when we're basically out of the earnings season, that is a substantial, it's almost a 30% jump in full year earnings expectation versus where we came into the year. And it's not over. I'm of the opinion that we're probably going to have somewhere in the area of 210 to 215 in earnings per share for the full year. So while the market may have gotten ahead of itself for now, that's I would say that's your benefit. If the market wants to consolidate that much more near term, the earnings trajectory suggests that it's to the average investor's advantage to take it, to buy the dip, so to speak, or for lack of, a better phrasing.
Okay. All right.
How does the Fed fare? How does the Fed play into this? Again, thinking more macro, political.
How about this? Yeah. How about this? We're getting a comment from one of our viewers. How are earnings going to go when the stimulus checks end?
So here's something that's been widely not under the radar, but it just had, because there's so much noise about inflation and when is the Fed going to taper, I think a lot of folks have forgotten there's more checks coming. Child care tax credits are going to start to roll out in July. the average household, if you have one child under the age of 18, is going to get $300 to $350 a month until December. So imagine if you have 2 children, which is the average household in America. 67 million families in America are going to get upwards of $600 a month in additional fiscal stimulus. That money that used to go to, and I can speak from, you know, my own experience. I have a 5-year-old and I have a 3-year-old. My 3-year-old goes to daycare. My 5-year-old is going to graduate kindergarten. So I've done my job and now she can go to work. Of course, just kidding. But my 3-year-old, I pay $500 a month in daycare. So that is a boon for the average household. Where do you think that money that used to go to paying daycare cost or, you know, whatever other kind of childcare cost is going to wind up? Well, we're consumers. It's going into the economy. One way, shape, or form, it's going back into the economy. So in the sense that where is the market, where are those earnings going to go when the fiscal stimulus ends, when the checks ends? We're still far away from that. We're still far away from that.
And how long will that last? Till year end?
Yes, those go until December.
Okay.
Yeah.
Merry Christmas.
Yeah, exactly.
All you mothers and fathers out there, Merry Christmas.
Yeah.
Okay, so you know, you really have some great insights and things that a lot of people don't look at, Seth. So maybe you could use the next couple minutes for letting people know how they can reach you and
Yeah,
via
absolutely.
Twitter and your website and you know, your newsletters. Talk about your business model here.
Yeah, so you can reach us at phenomgroup.com. We have 3 levels of membership: basic, which is free, which, you know, gets you access to some of our free weekly content. We have contributor and premium memberships, which give you access to all of our research reports that we send out weekly and our state of the market videos. Again, very, very detailed reports, which can run, and our research is actually white papered by some of the biggest institutions in the entire world, including hedge funds, Wells Fargo, Credit Suisse, Hightower Advisory Group, the list goes on and on. Very, very detailed charts, analytical studies, quantitative data, economic data we dive into every week, the earnings outlook every week. And then, of course, we have a wrap up segment here, just kind of looking forward. We're getting into the time period between Memorial Day and Labor Day. Well, how does the market perform? We have all of that. We don't leave any rock unturned. On Twitter, you can find me at here. There you go, at SethCL. And I usually put out, you know, a good 10 or so tweets a day. Some of it is within our research and what have you. And others are just, you know, thoughts on my mind.
Yeah, well, I'll tell you what, everyone, to prepare and write all of this research, it doesn't just happen. It takes a lot of hard work and a lot of time and energy. And Seth, you know, you definitely demonstrate a passion for, you know, keeping your people informed and, like you said, looking at everything. And I want to thank you for sharing some of your work with us today, and hope
Absolutely,
you have a great, I hope you have a great summer trading season. And it was really nice to see you and talk to you again, Seth. I appreciate your time today. Thank you, my trading warrior brother. All right. All right. So everyone, Seth Golden. Thanks, Seth. You're getting people. Monica said you were interesting. We won't give out your phone number. And thanks again, Seth, for being with us today, and good hunting. So I guess Seth. Okay. All right. All right, everyone. So we'll see you for Turnaround Tuesday tomorrow. And you could join the team in 15 minutes for the Morning Edge. Good hunting. Remember, don't just count your economic statistics, count your blessings. And see everyone tomorrow. Thanks again, Seth Golden. Adios.